Hello and welcome to Encrypted Inc. I'm your host, Dan Encrypted, decrypting crypto and ASX for you. Shout outs to James Picton, Perth Crypto Crew, Kevin, Perth Crypto Group. If you're from Perth, want to know more about crypto, get on onto Facebook and join the group. Thank you again for your support to both you guys. Much appreciated. Very quick Asx Market update before I get into Secrets Revealed episode 4. So, seeing from my last video, if you had watched that, basically said that the US markets were heading in the red. Well, they closed in the red. Okay, so all the Dow Jones, NASDAQ, and S&P 500 on Wall Street all closed in the red. Now, if anyone wants to trade the ASX, you must keep this in mind every single day that you do trading. Why? And I'll explain to you again. We follow American markets very closely. So if I've seen this and it's now 10:22 a.m. and the ASX is open, what do you think is going to happen in the ASX? Most likely it's going to be in the red as well. And look, it's live right here and it's at negative 1.2. For the S&P ASX 200 and all ordinaries is the same. That's already down 1% and it's, market opens at 8, it's now 10:30. Most likely this is going to finish in the red again. I don't think it's going to recover from that. So there's a tip for you. Keep an eye on American markets if you're interested in the ASX. If you're not and you're interested in crypto, that's perfectly fine too. Now, Secrets Revealed episode 4. Let's get into it. Trading tools. So what do you need? You can either have an exchange that gives you access to TradingView, and there are a few out there that do. Binance, I believe, is probably one. I think SwiftFX gives you access to TradingView, so you don't even need to get onto TradingView if you don't want to, because your exchange may provide that for you. So just check that up when you are selecting an exchange or wanting to trade. So, because it's important to have if you want to do it full-time, or even it's just good to have if you want to do it part-time as well. Right, if you don't have an exchange that does that, you can go to tradingview.com, and if you go there, it is completely free. You can get TradingView for free. Now, keep in mind, I have the Pro subscription. Why? Because it allows me to do a split screen. So you'll be able to have one chart here, but not 2 or more. And, the higher subscription you go, you can have up to 8 charts, I believe, but I just only need 2, so that's fine. What else I've got? Here's another couple of screens there, so I can split it, so I can actually have more than one chart. And you can also do that on the free one as well. It's quite easy just to open up another tab and have another chart there, but you'll be switching between tabs. Why did I pay for the Pro subscription? For me, it was important because if I have 2 charts together and I'm just studying charts, I can find correlations between 2 different charts potentially. And that's why I paid for it. And there's also another reason as well, and that's because I also trade ASX. And in doing so, to get live data from the ASX, you need the Pro subscription, and you need to pay again monthly for access to their live data for the ASX. Otherwise, your data from the ASX will be about 15 minutes delayed. Which may not be important to some people, and that's fine, but for me it is. So all right, now we've got the trading tools out of the way. Let's get into some trading techniques. So I'm going to talk about Fibonacci levels, trend drawing lines, which you would draw in yourself, and I draw my own Fibonacci levels. You can use TradingView's Fibonacci levels if you want. I just prefer to draw my own, and I will explain exactly how I draw them to you as well in this video. And MAs, or moving averages. Moving averages is simply an indicator. It's an indicator that I use. I use 3 different types, a 5 MA, an 8 MA, and a 480 MA, okay? You can use those ones as you want. You can set them up however you like as well. But those are the ones that work for me, and I'll explain why. Okay, but let's go back to Fibonacci levels. So what is a Fibonacci level? Well, what does it tell you? Now, putting this just very simply, it just tells you different certain levels within, I would say, I call a sideways channel in a market. So sort of look at them as bullish levels, bearish levels. Now, when is the right time to look at maybe drawing up some Fibonacci levels? The best time to do that is during a consolidation, or what other people may also call an accumulation period. So what defines a consolidation or accumulation period? Okay, I'll give you an example of what's not. This is not as such, okay? And definitely not back here when, you know, a bull run is happening and it's going up. I mean, you can draw levels there and you can look at it at a short time frame, but like I said, I'm looking at it at a more larger time frame as a trader compared to someone who might be looking at a short time frame. And I respect the fact people would look at it on a short time frame, but we're doing it on a large scale time frame. So this is a yearly chart that I've got here. So as you can see, this was Bitcoin, and this was the bull run that we've just seen. Now, as you can see, it's gone now into what I call a sideways channel here. See, not what's in purple, but what's in between it. Okay, so how do you draw your sideways channel? So you're thinking, okay, I've seen this come up. I might have sold out here, but I'm seeing all this now. Okay, well, let's start with, you know, a high just out of the bull run there, and a low just out of the bull run just here. See that? See this high and low area here? That's your starting point. So what would I do? I'll get my drawing tool from here, which I've got highlighted now, but I won't do it because I've already got them drawn in. And I'll draw a line from that high as we're exiting the bull run and it's starting to come into this consolidation period, and I'll draw it across. Then I'd find the low as we exited the bull run and draw a line across there. So you can see it, it's there and there. That's your starting point. Very first thing to do, highs and lows. So you might not see this straight away. Generally you probably will. I mean, this would have happened. Then when I see it, it goes down there, up there, and then it came back down here. And then probably about this point in time, I can say, yep, it looks to me like we're entering a consolidation period. I'll draw these lines. Now, why is this important? I'll get more into that now. But let's go step by step as to what you want to be drawing. Now, look, everyone probably has their own take on Fibonacci levels. This is just what works for me, so I'm just sharing that with you, okay? You know, someone might see it completely different to me, and that's okay. And I respect that. So what would be my next step once I've drawn those two lines, the high and the low? I then look at where they are on this chart and I find the exact middle of that channel. And I will draw a line through there, and that's that line there. Now, why do I do that? Well, now I've got a high, a low, and a mid, okay? Now, in buying and selling, this is very important because it's almost giving you here different fear and greed indexes within levels on a consolidation or accumulation period, okay? Now, what else do I want to do besides the channel itself and these three levels that I've put in here? Let's extend the levels. Now, how do you successfully extend the levels? For me, what works, and it is the very easiest way to do, is to look at the distance between your high, your low, and your middle, and find the middle and low and do the same distance again below that. And for the high end here in this purple area, it's just the same again. Middle, high, same distance between middle and high to find an even higher level. Now, why are these levels important? Okay. The reason why I highlight these, and I'll even have this one potentially down here as well, and that could be a completely another level, is because what happens when we start tapering away from this channel, potentially, or even going above this channel and into these purple areas? What starts happening? Buyers or people in the market start experiencing fear or greed, depending on which level it's going to. So people potentially, if it starts dipping down here, depending on what type of person you are, you may start experiencing fear. Why? Because you think, oh no, Bitcoin's going to fall. It's going to fall even lower. I'm selling. I want out of this. That's the fear, emotion coming into it, which you should never trade or invest with emotions, but this is just what happens. And it happens to all of us, and it happens to the best of us. So try to eliminate that when you're doing it, when you're looking at charts or analyzing them. So that's going to draw fear. Now, what's going to happen if it goes into the above channel here, this purple section here on a fib level? Now, this could provide you some sort of greed, an emotion of greed. Why? Because there's an increase in value. You think, I have to get in, this is my opportunity to make some money, right? So these two levels are very important. Why are they important? Well, as a guy that looks at a chart all day, I'm interested if anything's dropping below here. I'm interested if anything's going above there. Why? Because fear in itself can cause market movements in an upwards direction. Most likely, and almost every time, it's generally this lower between these two Fibonacci levels that can spur a market increase. Now, it can also work the other way sometimes, but it's not very common, which means it will sort of go back up into this level. But then what it'll have to do, and I haven't drawn it here, would maybe put another level above that, another Fibonacci level to confirm that. And then maybe then I'll get back in the market. But I prefer if it actually drops into these levels. Now, this gets me on to trend drawing. And also MAs. Now, I use both of these to confirm my belief that we're entering into another bull market. And this is why I said to you just previously that I prefer when it actually goes into these two levels. Okay, these two Fibonacci levels, there and there, which would be that area there or the purple area there. Why? Okay, I'll give you an example with Ethereum. This was Ethereum prior to the bull run. These were the lines, fib levels that I drew in previously, right? When it was back here, I drew them in. I drew them in a long time ago. And with charts, they're great. You can actually, once you've drawn, oh, it's not going to let me go across. Do I have to move my head? Okay, here we go. With charts is great. So you can actually just continuously draw along a particular crypto or stock as you go. And it's great to do because it just sort of reminds you what you have to do. Okay, so look at this. This is where Ethereum dropped, a massive correction. The one we saw when back in bottom out May 21. So that was the big correction, big news headlines, Bitcoin, at a 30% or whatever drop. I can't remember now exactly, but it was the huge drop. So it hit here, it bounced. Now, as soon as it hit here and it bounced, I'm drawing a line from there across and from there across. Why? Because I believe we're going in a consolidation period. And what did we do? We did. Now, like I said before, I drew a mid-level. Okay? Once I did that, I then started drawing my other Fibonacci levels here and here. Okay, so there's one, there's channel below, and I didn't draw a channel above on that. So again, high, low, don't worry about the wick generally. That one I could probably adjust. See, I mean, it's not perfect, but you know, as long as it's there. So they're not the wick, just down below, above, mid, found the distances, drew the same again below it. Okay, now where does the trend line come into it? As we're going into this sideways channel here, through these Fibonacci levels, the high, the low, the mid, if I start seeing a high up here and then sort of a little downwards trend but a bounce back, you can start then thinking, all right, I'll draw a trend line. Now, what does a trend line give you? Okay, I'll draw one here. Even though I haven't drawn one, I'll draw it before. I'll draw it now. Point to the high, next point to the high, and then just extend it. Okay. Now, what does that tell me? Well, it tells me that probably other people are doing the exact same thing I'm doing, because a lot of this lit up in green, right? Because what that means is that because it's hit this low Fibonacci level here and it's intersected through my trend line, people were probably even anticipating it before, the market started moving up, okay? But then it sort of tapered off and moved down. Now, look, you're not always going to get the entry to a market perfectly correct. So even if we didn't have all this data, like anything here, I could pretty much say that could have been a very, very good entry point somewhere around here. And if I bought in there, I would still be happy. Even if I saw it go up a little bit, extend into the low end of this channel that we drew originally, right, and then drop back down, I wouldn't sell out. I'd go, I'm happy with that, that's fine. There's an entry level, I'm okay with that. But then as you're starting to see it go down here as well, reach a high within that particular fib level and then start heading down, I'll draw another one from here to here, keeping in mind my lower fib level. Now, where that lower fib level intersects my trend line is another buying opportunity. So if I bought in here, I'd be happy. Okay. Now, trend lines are interesting because, see, this particular trend line, I could have bought in here, but I would have had to wait a little bit before then. So what I decided to do is try and work on an indicator called a moving average. Now, you can see the moving average here in yellow. Now, from the time that, not including this section here because it hasn't gone into the consolidation period, if you look at my moving average, it doesn't intersect there, it just skims off the top and then trends back down. But when it intersected right here, based on even this trend line, so you could go in there, but if you wanted to, you can use a moving average, and when it cuts through the trend of, you know, that particular crypto or stock, just like here, what happened? Oh, I'm on a drawing tool, sorry. I'll just bring that into a cross. What happened? I'll bring that into something larger because it's not working it. All right, well, it's not showing here, and it won't let me drag it, but that point was actually just right here. And then we entered the bull run. Up and up and up. Two flags, what I call flags, one here, one there. People may call that a bear trap. It's where it looks like it's turning bearish but then becomes bullish, which is why I flag it. Because I go, if I'm trading, I'll look at this and I'll go, yeah, okay, it's gone up, it's gone down, down, down. Interesting point here is this particular large candle here is what I'm looking at. If it sort of goes below that particular candle, I may be thinking, no, we haven't entered into the market. And if you look very closely, it goes in line with this Fibonacci level. So you could get in here, come out here and go, look, if it's going to drop below that fib level, I'll sell out here. And some people probably did, but what happened? It actually is, I don't know. People can say it's a dead cat bounce. Yeah, it potentially is. So what it did, it bounced back off that fib level and went and continued to be bullish. Okay? So this is what I'm looking at a chart. I'm looking at that. All the late nights, I'm looking at it going up here, coming back down, keeping an eye on this fib level, and I'm like, what is it going to do right here? And I'm patient. I don't sell out. I don't sell out. I mean, I could have took a gain up there, but I'm like, I'm willing to wait, be patient, see what happens, hit that level, bounce back again. Did the right decision because I was just patient. Okay. Now, that's it. That's all I can really tell you. So that's Secrets Revealed, Episode 4, Fibonacci Levels, Trend Drawings and MAs, to give you the advantage of when to enter a market. Putting it very simply, this is all I really look at. They're my three things. They work for me. Other people may have millions of other indicators that work for them, and I completely respect that. But for me, I keep it simple, and this is what works for me. It's worked with Ethereum, and it's going through pretty much the same period again here. So, look, I hope you got something out of this, guys. Thanks for tuning in. I am Dan Encrypted. You can find me on Facebook at Dan Encrypted. You can find me on Instagram at Dan Encrypted. A little bit about my workspace, some personal life stuff in there, but not too much. Also on Twitter at Dan the Encrypted Man. This is my YouTube channel, Encrypted Inc. Thanks for tuning in. Secrets Revealed Episode 5 is going to be a little bit of an interesting one. It's going to be a little bit fun. It's going to be very short, and I'll probably even do it today. And you know what? The title of this one is called What is a Black Swan and What is a Black Swan Event? And look, you can take this with a grain of salt if you want. But I'll give you my personal views on what a black swan is and a black swan event, and take it or leave it. It's up to you. But tune into that, and yeah, it's just something a little interesting. Thanks for tuning in, guys, and I'll see you shortly.